Hey there, everybody. Once again, Jason Trafford here from Total Business Solutions, Tax and Accounting Services, Total Business Solutions. And I am here to explain one of the most important taxes and entity strategies involved in having your own business or a new business or a small business and transitioning to something a little bit bigger and growing. It's only an issue when you start to have profits, but of course we all want profits, so we do what we can to make sure that we get into these profits soon. So what I want to do is explain the little thing that they like to call the self-employment tax. Self-employment tax is an additional tax on the profits of your business, and basically a sole proprietorship or an LLC. So if you have an LLC and you don't have any corporate entity, this does apply to you. If you're already involved in a corporate structure of some kind, then this doesn't involve you. The LLC does not count as a corporate structure. So if you've elected to file your taxes as an S corporation or a C corporation, this does not apply to you. But for everyone else, including partnerships, this does apply to you. So, self-employment tax. Now, once again, keep an eye out for over here, email, tbsstrategy@gmail.com if you have any questions, or you can comment below here. Also, we have my Twitter here. So, but I'm going to get, the Twitter is @tbstax, but I'm going to get to work here. So, let me draw out, I'll step aside here so I can draw out the basic tax return as you'll see it. The basic tax return, the personal tax return, is Form 1040. Now, the most important part are page 1 and page 2 of the 1040. Now, in this situation, you're going to see wages or your W-2, your paycheck from a regular job, or if you're married filing jointly, your spouses. You'll have interest, dividends from investments, state tax refunds. If you're itemizing, those are taxable. And then once you accumulate some of the variations of income, now you have to start thinking about your business income. The business income normally appears in 2 different boxes. Box 12, which is the Schedule C income. Now, I will say most sole proprietors are actually filing in the Schedule C section here. So what we want to make sure is that that you understand that this is where the majority of the group, anytime you have side income, business income, whatever it might be, a hobby or trade, things like that, it's going to normally end up on Schedule C. Schedule C is a different schedule which allows you to take deductions away from that income, and then the profit shows up here. Now, let me get out of the way so I can draw this out. The other place that a income can transition to business income is Schedule E. This is box 17. So, what we want to look at here first is at the end of this whole deal, you're going to get your adjusted gross income. AGI, adjusted gross income. Now, adjusted gross income will flow to the very top of page 2, and then you'll take away your deductions, whether they're itemized or standard. You'll take away your personal exemptions. That's basically everybody who's on your tax return. Married filing jointly, there would be 2 there, each individual child, and things like that. So any other dependents, whether it might be a mother or something like that. So here we have that, and then that nets out to be your taxable income. So that's what's taxable. Let me show you how business income works here. Business income, showing up here, will add to your adjusted gross income, which in turn comes up here, which in turn nets out to what is taxable. However, the additional tax that we're going to talk about, self-employment tax, is an additional 15.3% on every dollar that shows up there, on every dollar of profit. Then this will go here and add to it, making this your tax total. So, self-employment tax can only be reduced by taxes that you've already paid in, estimated taxes and things like that. But as you can see, we have a dual tax situation. So, this is dual tax. And maybe angry face, bad. So, this is a situation, of course, everybody wants to get out. Whenever you can get a chance to be taxed in a singular location as opposed to a dual, that's just simple mathematics. So you want to make sure that you can do that, but how do you do that? Well, one of the main strategies that we employ is to elect to be taxed as an S corporation. An S corporation is a flow-through entity too, which allows you to be on the tax return just like this, but you avoid the dual tax situation. Now, there are a couple little caveats that you might have to do with an S corporation that you won't have to do here. But with an S corporation, one of those things are, the main thing is having to take a reasonable salary. But reasonable salary can be zero depending on your situation. So it's not an immediate thing. But what is immediate is the money that you will save by being taxed as an S corporation, because you are only then paying a singular tax location as opposed to the dual tax, and the self-employment tax goes away. So you're saving yourself 15.3 cents on every dollar of profit with that move right there. So let me get to that. Clear this box, box 17 again on year 1040. When you elect to be taxed as an S corporation, your profits end up here. Now, they're still a part of the adjusted gross income and in turn still a part of this routine here. However, we cancel the self-employment tax out and we have a new total. So, as an S corporation, it's an S corp total. This is happy. So, we're ecstatic about this because the S corp total is going to be, in most cases, a lot less. So, to think about this again, let's reiterate. The actual S corp being lower in taxes is an immediate savings. There's even a late election which allows you to backdate it to the beginning of the year so that you get the full year's credit as being an S corporation, as long as you qualify. And qualifying just means you were running the company as an S corporation and other things like that. So it's not a very difficult thing to qualify for, and almost everybody running a business day to day qualifies for it. And it immediately saves you these taxes. So in this situation, it's a bunch of gobbledygook now, but really this situation, we're doing away with the additional 15.3% tax. We're being taxed one time instead of twice. And then the tax savings passes immediately to you at the end of the tax return. So this is a great strategy. So for those of you getting paid a 1099 and you feel like you're just getting hammered in taxes, you are getting hammered in taxes. This isn't your imagination. You're being dual taxed. You're being taxed for your regular income tax and your self-employment tax. So what we want to do is we want to make sure that we do things to consider yourself a business. So people that are getting 1099 or side business and things like that, whether you're getting 1099s or not, any business outside of regular W-2 wages can be taxed as self-employment tax. The proper thing is to set up the right entity structure, get yourself into an S corporation strategy, and then start operating an S corporation so that you're only being taxed on your actual dollars as opposed to padded taxes in other portions of the IRS code. So this will save you taxes immediately and get you off the hook for that and make it a lot lighter on your pocket. So you can put that money back into your business, which is always a good thing. So again, it's called self-employment tax, bad. this is much better. Electing to be taxed as an S corporation, you're literally moving it from one box on the 1040 to the next. And again, it's Total Business Solutions and Tax and Accounting Services. And that's here in Phoenix, Arizona. And step aside so you can see my email and my Twitter once again. tbsstrategy@gmail.com. Twitter is @tbstax. So, again, my name is Jason Trafford, Total Business Solutions, and it's been a pleasure helping you out with your taxes. Have a great day.